Okay. So my screen is visible. I guess it's not.
No, not yet.
I don't know why it happens. In just a second, I'm rejoining. Okay, your entire screen. I don't know, like why it is not being presented. Just man, do you guys have any idea like why it is not being pressed? Like I'm pressing on this, and this option is being blank. Right? I don't know why. What is happening?
Maybe if you like, you can join on Zoom.
Right now. Okay, just a second. Is there anything else? So you have, is whiteboard visible to you all?
Uh, no.
Okay.
No.
I don't know
It
why.
says access denied. Request access.
Never happened before actually, and without sharing screen, it is not possible, right? Okay. Just wait. I'm creating a Zoom link. Okay. Mm, guys, please join on the Zoom link. What I have shared, right?
Okay.
Okay. No, it's good. Audio is clear.
ये बेटी का अकाउंट है मेरे.
अच्छा.
और तबीयत कैसी सर?
क्या?
तबीयत, how are you feeling?
Yeah, it's good as of now. Okay, so I guess everyone is there. तो कुछ लोग स्कूल की तरह बंक करते हैं क्लासेस. Okay, so let me share it. So I hope it is visible.
Yes.
Okay. Great. So the thing that we will discuss today, it is a chart pattern, right? और चार्ट पैटर्न के बारे में अगर मैं आपको थोड़ा सा पहले बताऊं डिटेल में, लाइक डिटेल अपन बाद में चलते हैं, पहले इसका बेसिक्स में चलते हैं. तो चार्ट पैटर्न एक्चुअली होता क्या है, राइट? सो व्हाट इज़ चार्ट पैटर्न? तो अब जब चार्ट पे आ रहे हो तो हमने तो देख लिया कि अपने पास we have seen that we have candlesticks, right? When we come to chart, we see that there are multiple candlesticks are present, right here, and it forming something blah 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 stuff. But I don't know what to do, when to enter, right? When to make some trade. What are the patterns that it is forming, right? So in that particular condition, we go through to chart patterns, right? So what happens in chart pattern? We as a trader, our job is, could you please mute yourself? Okay. So in order, if we understand that how chart pattern helps in us in trading, so there are multiple candlestick, and what we do, we find some patterns that are previously defined patterns, obviously, and that is have being succeed in years for years. So chart patterns are the patterns when lots of candlesticks combine, like candlestick, and they form something relatable, something good that will help you to analyze and get enter or exit for a particular trade. So that's why chart pattern helps us. Now the thing is that how it looks. So if you guys look right here, so there is something I have drawn right here, I have drawn it right here, and then there are, just look at this thing. Why I have drawn this? So the basic idea of drawing these are, it is a chart pattern. It is a chart pattern. And which kind of chart pattern it is? So if we look at this, so candlesticks goes like here, comes down, goes up, comes down, goes up, comes down, goes up, and boom, it hit your target and comes back for retest, and again it started to go up. Now the scenario is, how do we identify this particular thing? Okay, so for that, as of now, we understand that what are support, we understand that what are trend lines, we understand that what are resistance, right? So we know support, trend line, resistance. We also know candlesticks, right? Candlesticks patterns. So we are done with support, resistance, trend line. We are done with candlestick patterns. So definitely we will utilize all of these concepts in our chart pattern. Okay, so let's see how it looks in day-to-day life. So chart pattern, if I'll talk about, or in any kind of market, right? You know that there are three conditions on which we trade. Either we trade on breakout. I'll just let you know what is breakout. Either we trade on fake out. Either we trade on reversal. Either we trade on sideways market, right? Apart from this, market is not going to anywhere. Is there any more direction market is going apart from this? No. Either it will break particular level, either it will break and again fake, that was a fake out, either it comes and fall. So this fake out and reversal trade comes in same scenario, but we have breakout, reversal and sideways. This is newly designed now by me only. So the scenario is that how do we identify breakout, do we identify some reversal, and how do we identify that it is a sideways market. So obviously you guys know that what is sideways market. Let's say market open at this point, it comes down and started moving something like this. So if you buy at here, you are expecting it go up, it comes down, then again comes up and blah 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 blah. So it's a sideways market, right? And now in sideways market it is really difficult to trade, but we have some indicators for that, right? We have some indicators for that. We will understand this thing in indicator. Now what I just want you to say that we have three things: breakout, reversal and sideways. Okay, and fourth thing if you include it is fake outs. That is happening most of the time in the market nowadays. Okay, so how do we identify this? Now if I talk about some reversal pattern means that it price started to moving up, right? It goes up, then there is some selling pressure, it comes down and again it goes up. This is its resistance area, right? This is its resistance area, and this price does not break this resistance level. So what happened now? This started to fall. So if we have understanding that whenever this situation happens in the market, we have a resistance at this point and it started to move down, so we can easily understand that, oh man, it is a reversal pattern, right? Price is now going to reverse. If I'll show you in live chart, so let me show you here. If you observe, what you can see, you will see that price is going up, let's say from this direction, right? Price goes up, comes down, goes up, and again it comes down. Now is it a double top pattern? Obviously it is a double top pattern. We have first top, we have second top, so it is a double top pattern. So if you guys know that how double top pattern looks, right, what it is uses, how we take trade in double top double bottom, definitely I will let you know the details. But as of now, just understand that in case of double top and double bottom, how it is being utilized, that whenever you see a double top pattern, then you wait for this particular area to break. This thing is known as neckline, right? And once this particular neckline breaks, you can expect this level as your target by setting a stop loss somewhere here. Okay, but if I will talk about my strategy, so my strategy says that you can short at this point and you can get this target. So I will definitely share my strategy similarly in bullish double top pattern. We can enter here and we will take this profit. So I will share that in my strategy session, why I love to trade on double top and double bottom. But as of now, just understand this thing, that why it is happening, right? So it is happening because buyers are pushing the market. Obviously it break this particular level, whatever it was resistance level, then sellers are like, oh man. Just if I tell you why breakout happens for a general scenario, so see, there is a line, right? It is a line where buyers are sitting, okay, and here only sellers are sitting too. Okay, so what happens, that when price breaks this level, when price breaks this particular level, so those buyers who were sitting at this point, they're like, oh man, I would have bought here, okay, no issues, I will buy at this place now. So they started buying, price goes up. Why it comes for retest? Because the sellers who were supposed to sell at this point, right, and then they're like, oh man, now it is going in losses. Okay, so once it comes to my direction, once it comes, I will uh, those buyers who missed, there are two types of buyer, one who entered and one buyer who missed this particular trade. And there are kinds of sellers, one sellers who sold at this particular point and whose stop loss should be at this particular area, and particular this area. So their stop loss got hammered. They are exiting from market, obviously. So they are exiting from market, then it is buying, and it goes up. The second scenario, it goes up, comes down, and again goes up. So here only buyers are aggressive, right? Here's only buyers are aggressive. Now what happens right here is that buyers are like, okay, once it breaks this level, or this level is too costly for me, and then suddenly he observes a momentum and is like, oh man, it is going up. So they miss this trade. Lots of buyers miss this trade. So what they are expecting right now is that price will come back, right? So buyers are expecting that price will come back and I will again buy at this particular price level. And those who booked their profit leads to price go down for a retracement, and once it reaches this particular level, what happens? Buyers are like, oh, now I am entering in this trade, it is in my level, right? It is for, let's say, $3. So now it is for $3, I will definitely enter in the trade. So buyers initiate the trade and then it is buying. So that's how breakout, it is pure breakout. It when it breaks, price goes up. This is retest. Retest happens like it goes up, comes down as for retesting this particular price level, and it again goes up. So normally I do retest trading by looking at volume, obviously, but it is highly preferable if the target is not less. For example, that if you it breaks this level and target you are watching only this level, so for this level you can't wait for retest, so you can definitely enter in the trade. But if target is something long like 15 pips, 20, 25 pips, so you can wait for retest. It is safest method to get into any kind of breakout trade, right? So whenever in breakout trade, just wait for retest thing. So it happens breakout and retest. So here only, if we will talk about these patterns, so what happened right here? Here reversal pattern, but it breaks this particular level, so the breakouts happen and we will short this. Similarly, in case of head and shoulder pattern, what happens? If you observe in the market that it forms a shoulder, it forms a head, it forms a shoulder, and it started to move down. So once this particular support level that is giving support, it breaks, we will initiate a sell, right? And let me tell you a fun fact about this thing, the market, that whatever I have told you this thing in candlestick 2, that whatever happens in bearish market, it happens in bullish market. Whatever happens in bullish market, it also happens in bearish market. But the scenario is both things are mirrored of each other. Like if you are expecting some bearish move, there is double top, just mirror it. If you are expecting some bearish move, bullish move, we have a double bottom. If you are expecting bearish, we have head and shoulder. If you are expecting bullish, we have a inverted head and shoulder. Bearish rising wedge and falling wedge. Wedge is falling, wedge is rising. So that's how it is, just completely opposite. Whatever you are doing in case of buying scenario, just you can obviously do the same thing in selling scenario, right? So in buying case, if I'll tell you that most of the time bearish rising wedge or any kind of rising channel, it breaks downward. Rising channel normally breaks downward, but looking at current scenario of the market, it will never be predicted that either it will go down or it will go up. So it is better to wait for breakout, right? So if we look at bearish rising wedge, so what happens that this wedge is forming because it is getting contracted. It is getting contracted because price comes to this level, it comes again. And if you observe that it is some bullish move right here, then sellers are like, oh man, how can I let this price go up? Then buyers are like, let me take this up. Sellers are again aggressive, buyers aggressive, sellers aggressive, buyers aggressive, sellers aggressive. And those who wins, market goes in his direction. If buyers wins, this will move something like this. If sellers will win, it will move something like this. So that's how, without breakout, we will never predict in which direction in the market goes. What I was doing in my initial days, that whenever I found that there is a wedge, for example, it is rising wedge and it is falling, so it is forming right here. So what I do, I was like, okay, so it is a rising wedge, which means that it will definitely fall down. Okay, so I sell at this particular point, or I sell at this particular point once I realize that it is a wedge. Now what happened, that price comes to this level, it gives a break, and I'm like, oh man, I'm a fucking genius, and it goes up. This was most frustrating experience, right? So that's why it is really important to wait for confirmation. When you really got a great confirmation, to enter in the trade, right? For example, here a breakout happens and you observe a bearish engulfing candle at this point. So it is our area of interest, as it is a trend line, plus we got bearish engulfing candle. So these things add confirmation in our trade, and we will act accordingly. For example, if there is a downtrend, okay, if I'll tell you that suppose this is a downtrend, okay, and at this downtrend you are observing that market is moving something like this, and here at this particular level you will see that there is, if I'll zoom my time frame, okay, see, so at this particular level you are seeing market is forming some wedge pattern, right? So now what it indicates? It indicates that price is at level, like your trend level, right? Price is at your trend, and it is signifying that it will fall down. There is a possibility that it will definitely go up as a breakout, but there are high chances that if rising wedge is forming at this particular thing, that it will definitely go down. If there is a falling wedge is forming, like it is forming something like this, so you can expect that price will either break, or the thing that will not let this price go down is what it is. It is a long term trend. So sellers are eyeing right here, right? So sellers right here, sellers right here, so they are selling, and they are waiting for this moment, when this moment happen and when we sell. So obviously they will sell, just go with them and you will definitely make some profit until this particular level. Understand this thing? Do you have any doubts? What happened? Okay.
No, no doubts, brother.
Okay, as of now, everything is clear to everyone? Yeah?
Yeah, yes.
Okay,
Yes.
okay, no issues. So
Yes, sir.
now what happens, that let's say that you are so good at technicals, okay? Now what happens, that when you come to when you come to real market trading, so it definitely, if you are not okay, where it is, okay. So if you are not prepared by mind to trade and you know all these things, you will not make money, right? But if you will do these things, if you definitely know what is happening in the market, how we analyze, how we say that, oh, it is going to fall. If I'll tell you in steps, just you can note it down. First, look at support level. Is there any kind of support and resistance? Second thing, if I'm telling you by example, so let's take example of bearish triple top. So first thing we will see that there is a support or resistance level. Obviously we found a support and resistance level. Second thing, in order to sell, we will find that is there any candlestick pattern, right, with indicating that you can sell. Third, you can look on volume. Volume depicts the true picture. So if volume is in your favor, volume are also good or bad. So we will consider volume as well. So volume, and in my strategy of double top and double bottom, I use RSI. So see, these four things is saying you just short. One more thing that is also important, I forgotten, it is correlation, right? So once you observe all this scenario and then you are like, you are getting some kind of selling signal, just go with that selling signal, right? That's how strategy works. Strategy doesn't mean that you understand bearish engulfing candle and just at this point you short at bearish engulfing. The price comes right here and it will definitely go up. Take your stop loss at this point, it hits your stop loss, comes up and again comes down, and then you are in fear. So why to do so, right? That's why analysis by using support resistance, by using candlestick, volume, correlations, these are the facts that we see, and then are like, oh man, this is creating some kind of selling signal for me. So that's how we sell, we buy, or we stay out of market. Okay, so obviously we have studied support resistance, and you have studied these candlestick things. Today we will finish with this chart pattern, and next session I guess it is better to take for indicators, and after that we will go to my strategy session. Okay, so now the thing that as it is bearish rising wedge is forming right here, there is also a pattern that is something known as bearish expanding triangle. Just forget this word, I don't know what it is, and just don't also keep this in mind, right? Just let it go. Just remember that there is a pattern. If there is a triangle forming, wait for breakout. If there is a expanding triangle forming, like something like this, just wait for breakout. So it does not mean that you are like, oh man, this is rising wedge and you are a genius. No, it is not like that. If you trade that particular setup with good risk reward ratio, you make profit, you are a genius, right? So just keep in mind the way you want. Like if you want to say, oh, it is a contracting thing, then it is like, okay, it is contracting thing for you. You will never be asked in the exam that is it rising wedge that you have traded. That is not like that. So just remember these patterns with any kind of name you have. Okay, so if I'll tell about myself, I have my Gulabo right here and right here. So this is it, right? Now if I'll talk about these bearish expanding, so many times you will see that market comes, price comes, it moves in a direction, and if we started to make trend lines, and then we're like, oh man, trend line was supposed to go something like this, it was not supposed to go something like this, right? And then it is like, what happened, what will happen now? So see, again wait for breakout, wait for breakout, but the scenario is, if it is upward, it will break downward in most cases. If it is downward forming something like this, it will break upward. The reason I'm telling you. Okay, so what happens here is that your price comes in this particular level and buyers are aggressive right here. Why buyers are aggressive? They are buying, sellers are pushing down, buyers are buying, sellers are pushing down, buyers are buying, and if this particular price level goes up, it signifies buyers are heavy. How we know this particular thing? By looking at volume. How much volume is coming for buying and how much volume is coming for selling. So if in selling side there is no volume, less volume, or more volume than buying side, let's say this is selling volume, and at buying point it is less volume, again at selling point this volume. So what it indicates? It indicates that at selling scenario, sellers are more interested in this trade as compared to buyers. So that's how volume works, right? So you will definitely short at this particular level. And the best way to get target is from it started, it is its leg, let's say. So you can take foot, or you can make some few pips, like 4 5 pips above your predicted target level. See, if your target level is 9150 0.9150, so you can make it 0.9154, right? So what it happens that many times in the market it comes, it does not touch your target, or it touches your target, but due to spreads you will not able to get that particular target. So in order to be aware of that particular thing, because see, financials are also observing this kind of patterns, right? Big hedge funds are also observing these kind of pattern. So definitely don't they know that you guys are fool, right? Every retailer is fool, let's say. So what they will do, price will come up right at this point, and they started to place buy. So buy, and boom. So your profit just goes to vain. Always remember, the money is only profit once it is booked. If it is not booked, it is not profit. At many times you will observe that it is running $600, it is running $700, right? And then it is running $1,000. So at the time you take the screenshot and share with your friends, this is the time you should book your profit. At the time you started feeling happy and you are like, oh, I have made a lot today, this is time, book your profit. This is actual time to book your profit, else the market will reverse, and if it reverses, you will exit with plus $200. So I was up for plus $1,000, I exited the trade with plus $200. What is my mindset would be? It is definitely frustrating experience. So if you don't want, you are like, no man, there is a quote that holding your winners, hold it, no issue, hold that, but book some profit. For example, you have booked 60% of it, and now you are holding 40%. So that it will go to next 10 pip, then you will dilute this 20% right there. Again it goes, you dilute your profit. So that's how it works. So in order to stay aware of this thing, just think like that. Think like how a particular thing can be happened, and it happens in real market, right? So the scenario is, if bearish expanding is forming, we have bullish expanding triangle, right? Bearish triple top is forming, we have bullish triple top. So whatever happens in bull market, it happens in bear market. So just keep this thing in mind. I will share the screenshot of this pattern thing, just go through it. Okay, similarly we have channels. If we look at channels, so these kind of pattern, what does it indicates? That there may be a reversal in the market, price is going to reverse. That's why these kind of patterns are important. Now what is continuation pattern? So continuation pattern is like, it is moving up and it waited for some time, gained some momentum from buyers, and it will goes in its direction. So many of time you will observe that there is a flag or bull flag. So this bull flag goes up. So this is something known as flag and pole pattern. So what happens, that flag and pole goes and it is like boom and then boom. So in order to be beware of this thing, you need to understand that how continuation pattern works. So continuation patterns are like, see, we have buyers who are buying this aggressively, buying, and then at a moment buyers are being exhausted. Everyone, see, if you are running, let's say you are running or jogging, and at a particular point obviously you will get exhausted, right? Isn't it that you are running continuously for a moment and then you are like, oh, I will definitely run, your energy will get low, you will okay, see, this is the issue of Zoom. Okay, so it is running like that. Okay, so when buyers are keep running a lot of time, so what happens that buyers get exhausted and sellers are trying to dominate the market. So sellers push this price down, little bit of buyer push this price up, then sellers down, buyers up, sellers down. There is a fight between sellers and buyers, sellers and buyers, sellers and buyers. Now there are new buyers who are interested in buying. So what they will see, they said, oh, price goes to this level, and then they are taking some momentum, let me help it to gain some momentum. So you will initiate a buy trade right here, and it definitely goes up to reach your target. So that's how continuation pattern works. Understand this thing? How momentum exhaustion works?
Yes. What would be the target here?
I'm letting you know right now. So in these kinds of scenario, first target should be this level. From the level it started being sold, this would be your first target. You can dilute 60% of your profit if you want. Here again in this pennant pattern, this will be your first target because sellers are aggressive selling right now. At this pattern, this will be your target. If you talk about this pattern, let it go because it is a ascending triangle pattern. Okay, so here you can take this level as your target at this point. So you will measure if it is a 10 pip or a 15 pip, you can make your target 20 pip, 15 pip. So that's how it works, right? Similarly, in case of symmetric triangle, your target, this would be your target. From where it started to fall, it is your target in buying side. Where it started to go up and forming symmetrical triangle, this would be your selling target, right? So this will be your target, this will be your target. You can dilute some and wait for more target. Understand this concept? How it works?
Yes, brother.
Yeah. So the ideal target,
Yes, brother.
yeah, again for this particular thing, like Vieira's rising wedge, you can make this as your target. In descending triangle, make this like let's say that this is 10 pip, right? So you can take this as your target. So this level, or if it is really narrow, so at this level will be your stop loss, and you can target 15 pip, 70 pip out of it. So whatever right here, you can make 1.5 of it. It will be easy target if it goes directly into your direction. Else the best target in these kind of scenario is this price pattern, sorry, not this, from where it started to fall. So if it started to fall at this point, if it goes up, this will be your target, first target. So we see that in many bullish falling wedge or a symmetrical triangle. So for example, if I'll talk about symmetrical triangle, so what happens that, let's say this is our triangle, right? This is our triangle and it forms something like this. It comes back, goes up, comes back, goes up, comes back, goes up. So at this point, if it gives breakout with good volume or any good candlestick which shows momentum, we can set this one is our target and we will approach for it. Either it will go up, retest, comes right here. So until and unless it does not breaks this particular level, we will wait. Our stop loss should be, in this scenario, it will be right here because we have, it is very narrow right now. But similarly thing happens if it is something like this, if it is something like this and price is like it, okay, and it goes up. So obviously you take entry somewhere here. So you cannot make your stop loss at this point. You can make your stop loss at this point. So if price comes back, your stop loss got triggered. You will not face more losses. Understand this thing?
Yes, I have one question.
Yeah, ask.
Can we go down to the bottom where you are going?
Yeah, okay.
Down. Now, supposing when we say that whether it is very narrow and we put our stop loss, that's understood.
Mm-hmm.
But to enter into the buy, suppose
Okay.
we are doing a 15-minute candle,
Okay.
right?
Mm-hmm.
Are we going to wait for the retest candle to finish and then enter, or while the retest is crossed and then enter?
See, it depends upon volume. if volume is high, if volume coming high, or at this particular candle closer volume is high compared to previous volume, we will enter in this trade. If volume is dead, like something this volume, then we can wait for a particular retest, because we are not sure that buyers are being aggressive or not, right? So volume saves you at this point. Or else if you have take trade, for example it goes up and you took the trade, so what happens, that there is only two scenario that will happen. Let's say three scenario. One, it will go up. One, it will come to retest, go up, and it will hit your stop loss, right? So in these three scenarios, you are buying at this particular point, you are buying, and if it was supposed to hit your stop loss, you can take entry at retest, it will hit your stop loss. So if you are initiating a trade which is you can, by looking at volume you can like, okay, it might get back for retesting, so just wait till retest level. If on retest level you are observing some bullish candle, some strength, don't worry, you can add more position to it, right? Adding position in your winning trade, it increases your profit, right? Adding position in your losing trade, it decreases your profit. So never ever average your losses, just average you can average your profits. For example, it runs 5 pip in my direction and I'm like, okay, my double top is working at this point, I will definitely add some position. If it breaks my neckline, then I will book my target at this point. So that's how it happens, right? So volume, look at volume, it signifies a lot of things. Understand?
सर क्या मुझे वहाँ पर शो कर सकते हैं ट्रेडिंग व्यू में?
अरे बिल्कुल शो कर सकते हैं. आइए. So the scenario was, what the scenario is, that what I told you, in this kind of scenario, this is symmetric triangle, sorry, not ascending triangle pattern, right? So what is this particular value? If we consider it, let's say 117 pip, 160 pip, somewhere around that. And once it break at this level, and just see the amount of volume you are observing here. Before that, if I'll talk about volume, just a minute. Okay. So here, if you will see at this particular candle, what is the volume? Sellers were,
it's like nothing.
yeah, sellers, it is supposed to, yeah, retailers are like, oh man, it is going down, right? I should definitely sell at this point in order to get this target. But what happened? Boom, there were no volume in the market. So that's why looking at volume is really important. Now if I will tell you some more examples out of it, just give me some time. Okay, it is my strategy. Okay, don't worry, where it is. Okay. So again, how volume helps, I am showing you. I will show this particular setup and the volume associated with it in my strategy session, else you guys will confuse from today's session, right? So we will discuss double top and double bottom in my volume in my particular session, but as of now we will discuss the normal volume that is occurring. Okay, so it is going up, volume was dead. What happened? If you observe at this candle, what happened? Volume kicks in,
More volume coming.
volume kicks in, and now it goes up, volume, and once this particular volume started to fall, volume was like boom up. Once it started to fall, buyers are not taking interest in the market, so we can book our target profit at somewhere this or this, any kind of level you want. So that's how volume is really important aspect for the market scenario. For me, obviously volume is important. There are lots of people who, shit.